As summer is coming to an end, unfortunately, the market is starting to pick up steam. In today's video, I'm going to take you through everything that's happened over the first half of the month of August in detail and tell you a little bit about what I expect to happen over the next few months as the market shifts a little bit. Before I dive into all the details, I want to be very clear with you that the Federal Reserve and the actions they take over the coming months may have an impact, but I want to reiterate that when they cut rates, that does not directly impact mortgage rates. The expectation of what the Federal Reserve is going to do really has the impact before any action is even taken. So, for example, we saw mortgage rates come down already this month. That's due strictly to the fact that overall investors expect the Federal Reserve to cut rates by 25 basis points in September. They haven't done anything yet. They haven't said they're going to do anything yet. But that's where the expectations and investor sentiment is leading. So that's really what is going to change things. So we see the president talking about he wants 3 full percentage points cut off the prime rate. That's not going to happen. He is going to be able to put his own Fed chair in place in 2026, which could cause a whole raft of other things. But for now, if you start hearing news sources talking about rates are going to be cut, interest rates are going to be cut, mortgage rates are going to be cut, it's nonsense. We don't really know what's going to happen until it happens. It's too complicated to be that simple. So with that aside, again, mortgage rates have come down a bit, which is good. And I think that's spurred a little bit of the activity we've seen here in the first half of August, where we had 18 homes go under contract just in this last week alone. Inventory is about flat. From where we started July, we did see it pick up and then come back down. We're in the same spot as we were on August 1st and July 1st, which is pretty crazy. That is not exactly normal. Days on market is pretty flat. Prices, though, are increasing. Now, you'll notice here that I shifted from the median to the mean in this little description. We're starting to see a little bit more variability in that median score versus the mean score in the condo market that I think better reflects the reality. The mean now better reflects the reality of the market that I'm seeing out there. So we will be talking about that going forward a little bit differently. But new listings have really shifted as we see the spike that we had back in March, and it's really come back down to earth where it should have been. So again, if we were to zoom in on that, I could make a case and say, hey, new listings are falling off a cliff. Inventory is dropping. You got to buy now. I'm not going to do that, right? This perspective matters in the context of where we used to be, not just pre-COVID, but even over the last few years. Yes, there is a reduction in new listings, but we're essentially where we were in the Augusts of the previous 2 years. So it's nothing to get too excited about or worried about. I do expect, since we've seen 60% of homes over the last 2 years, new listings hit in the second half of August, whereas we had 40% of the total listings in August hit in the first half. We should expect more to come. Again, patterns are meant to be broken, but that's what I think we should expect based off of history. Now, pending sales, another strong month, very consistent over these last few months. Former years, it was not so much. We did have some spike months like last July, where then the reduction into August could have seemed like a problem, but in reality, it was July that was the anomaly there. We've been very, very consistent here. There's nothing crazy going on here. Activity levels are highly, highly consistent, starting to even see multi-offer situations come back in some scenarios, which I have to say is a bit of a surprise, given that prices have not gone anywhere other than upwards. Now, closed sales, and we're on pace for a very strong August here, consistent with where we've been again over the last 2 years. So that is a good thing. Months of inventory for the single families is still down. Again, this did happen in 2023. We saw a bit of a crazy situation in 2024, but this really should be expected. It falls more in line with what we've seen over the last few years with the condo market, which we'll see here in a second, that this truly is still a seller's market. As long as the home is in a good location and good condition, there are buyers out there. I am still helping new buyers on a weekly basis, having people reach out looking for help. They're getting excited about buying something, but they need some guidance on finding the right situation, the right value, things of that nature, because a lot of homes are still very overpriced, in my opinion, and in theirs. So the fact that there are new buyers coming into the fold speaks to a very healthy market here. And again, it doesn't mean that prices haven't gotten a little out of control in some situations and some scenarios, as I've been very clear about. But overall, the market continues. The market continues to move upwards. Now, this is still the median. The sale price for singles has dropped. The mean, again, that is still the same. It has dropped a little bit, but again, in context, still very, very high. Still going upwards. We're still seeing record sales, specifically on the Bay, in both the condo and the single family world, to where there's really no slowdown in sight. So I wish I had better news for you if you're looking to buy, but the reality is, if and when inflation continues to rise, which these recent readings and reports that came out indicate that that is likely, without the tariff impact really coming into play. If we do see the prime rate cut more than it should be, and we can argue what should be means, the likely outcome is going to be more inflation in the housing sector. And if that happens, prices are going to inflate even further. They're going to continue to go up. So part of me thinks that a lot of this activity we had in August is people kind of getting ahead of the curve, taking that little mortgage dip, and finding a home that works for them. That's always the key. People aren't buying just because the math makes sense at that particular moment. Always, always comes down to the home. Days on market still low in historical standards, high compared to where we were in 2022, but that was not a normal time. So we are consistent on that front. And again, flipping over to condos, more of the same here, still a seller's market. This is the area where I'm seeing multiple offers on several homes, and homes going quickly that are priced well and in good condition. And that's going to be reflected over time in this slowly increasing sale price. Again, this is about as consistent of a chart as you can find when it comes to appreciation over time. And yes, some of this is being pulled upwards by newer construction. Some of these 3-bed, 2 baths are now selling even on West Avenue for 1.3 million, which was unheard of even a year ago. So, something I want to dig into down the road is really looking back and seeing where this drive is coming from. What is pulling these numbers higher? Is it across the board? Or is it really just these newer luxury builds that are driving the mean and the median upward? Days on market's still great. Now, speed, again, we've had a couple fast months here, and basically we are well below our average of 1.75 to 2 new listings needed to see one go under contract. We're trending more toward that 1.5. And again, that doesn't feel like it's a huge difference, but with inventory as low as it is and overall transactions as low as they are here, that is a big deal. So we've had a fast summer. And even looking back a year ago, yes, we had a fast July and August. And the year before, yes, we had a fast July and August. So it is pretty normal that that happens. But the difference really, I think, is that historically over those time periods, we did have fewer new listings and fewer going to contract. We had a pickup here for sure in 2025. And again, very, very consistent here around that 1.75 to 2 new listings needed to see one home go under contract. Now, what should we expect coming up? I do expect, and I've been crystal clear about this the entire year, I did not expect the Federal Reserve to cut rates or have the need to cut rates until September. Betting markets disagreed, but here we are, and the betting markets are aligned now. I'm expecting a cut next month in September. But as for the rest of the year, it remains to be seen what's going to happen. Who's going to win this political pressure match between the Federal Reserve and the administration? I'm not sure. Again, what the Federal Reserve comes out with has a direct impact on how investors react. That is what drives changes in the mortgage market. So, do I expect any huge material change in either direction over the rest of the year in mortgage rates? I don't. I think we still stay in the low to mid sixes for most products, for most 30-year conventional loans. Jumbos, you maybe can get a hair of a better deal. If you're open to an adjustable rate mortgage, you can comfortably get those in the fives even now. Do I expect rates to go back above 7%? I don't. So we've been in the same ballpark the entire year, and I think that is going to continue. Inventory, though, we should be roughly at our bottom here, and if history repeats itself, we should see inventory pick back up through the fall, through mid-October, roughly, before it starts coming back down at the end of the year. And that is deal season. Once we get to November and December, you start to see who the motivated sellers are, and you can take advantage of finding a good property at a good price. Again, is it going to be a pristine premium property at a clearance rack price? No. So please don't misunderstand what I'm saying, that it's deal season, but you can get a good property at a good value almost every year during that time frame. We just have to be active. And prices, we should expect these to basically stay plus or minus a couple percentage points where they are over the coming months. And that's the 12-month rolling average. The way that I do it is the result of that. But in reality, again, we're seeing some of these homes that are newly listed in good shape and well built and go very quickly and sometimes with multiple offers. So the market is still very strong. And I don't want to get hung up in these nuances sometimes of, hey, look, if we expect the overall prices on condos to come down 1% year over year, does that mean prices are falling? Should we wait? What I'm seeing boots on the ground in reality is that more buyers are coming into the picture from a personal anecdotal perspective. Sellers, not so much. And these buyers are ready. They're hungry, and they're just looking for the right property. So, with that, that's it for today. If you have any questions, you need any help, don't hesitate to reach out any of the ways you see here or down in the description. Here to help. My team and I are eager to help a lot more families make the move down here with this uncertainty. We don't know if prices are going to continue going up at the rate they have been. But again, if there is undue pressure to cut prime rates, that is likely to spark more inflation. And if and when that happens, prices are likely to continue to go higher. So thank you as always for hanging out with me. I'll see you next time.